This map looks like it's missing something. Yeah, it's us. China used to send 1 in 5 exports to the US. Now, we're lucky to even make the group chat. We picked the trade fight. China, they picked everyone else. India, Brazil, Vietnam. Hell, even Canada started texting them again. Meanwhile, we're standing at the global potluck yelling about soybeans. That's basically America's trade war in 2025. We slapped 145% tariffs on Chinese goods. It was supposed to bring back jobs, and instead, your iPhone cost as much as rent, your lawnmower's back-ordered until 2027, and US farmers can't sell soybeans to anyone but each other. On April 19th, after Trump's tariff bombshell, the S&P 500 dropped 15%. We tried to strong-arm the world with trade war tactics, but ended up isolating ourselves. So how did China, censorship-heavy, authoritarian China, end up looking like the reasonable adult in the room? Let's unravel the most expensive miscalculation in US trade history. Let's start with a few stats that set the stage. US tariffs on Chinese goods have hit an average of 145%, the highest in history. China has reduced the share of its exports going to the US from 19% in 2018 to 15% in 2023. And the Penn Warden budget model estimates that the trade war could shrink US GDP by 8%. So yeah, not exactly a win. Now here's the thing, America thought this would be easy. Raise tariffs, hurt Chinese exports, watch jobs magically float across the Pacific. Boom, made in America, baby. But real life, it doesn't work like a campaign slogan. Automation killed those jobs, not China. In fact, studies show that 85% of US manufacturing job losses since 2000 are due to domestic automation, not overseas competition. Because what the US didn't realize was that China had already spent 7 years preparing for this. Back in 2018, when the first shots of the trade war were fired, China was already working to diversify its exports away from the US by shifting its economy inwards and, get this, out-innovate America in sectors like AI, EVs, and semiconductors. Meanwhile, the US? Well, we were busy posting trade policy updates on social media like they were a bunch of selfies. But let's rewind a little, because this all starts with something called the China shock, aka the moment when America basically handed over the keys to the global supply chain. In 2001, the US encouraged China to join the WTO. The idea was that economic integration would lead to political reform. Spoiler alert, that didn't really happen. Instead, we got a tidal wave of cheap Chinese goods, a US trade deficit that ballooned past $500 billion, and here's the emotional gut punch, millions of American manufacturing jobs evaporated, especially in swing states. And those voters, they never forgot. Fast forward to 2016, Trump gets elected. Bring the jobs back becomes the rallying cry. But here's the difference between wanting something and actually having a strategy to get it. Because even if you could bring manufacturing jobs back to the US, they would probably mostly be automated, not labor-intensive like before. So sure, maybe we bring the factories back, but not the jobs. In other words, it's like trying to bring back Blockbuster, but expecting it to stream 4K movies. The first big mistake in this 2025 trade war? Assuming China would blink. When the US imposed that initial 10% tariff hike in February, then escalated to 20% in March, China just shrugged. It was only when the US slapped on an additional 34% hike in April that China finally clapped back with a matching response. And that is when things started to spiral. China knew something America didn't, that trade flows had already shifted. US imports from China had dropped by $100 billion between 2018 and 2023. But China's total exports actually went up. They just sold to someone else. India, Africa, Southeast Asia, even Mexico and Canada are scooping up the cheap goods America doesn't want anymore. It's like bargain hunters at a global garage sale. Meanwhile, the US is left trying to rebuild a manufacturing base it hollowed out 20 years ago. Only now, with sky-high labor costs, anti-immigration policies, and a 3 to 5 year delay on building any kind of meaningful production infrastructure. And guess who's picking up the slack? Vietnam, India, maybe even Brazil, but not America. The US consumer? Oh yeah, they're feeling it. Prices are up, electronics, household goods, even food.
Costs are rising across the board, and when the government realized that a 3x iPhone price tag wasn't going to fly, they had to quietly walk back tariffs on electronics. Yeah, that actually happened. A tariff walkback mid-war. You know what that's called? A bluff. And China called. Even worse, small businesses in the US are getting wrecked. They don't have the financial cushion or the scale to absorb higher costs or reroute supply chains. So while big corporations can pivot to India or Mexico, ma and pa shops, they're just trying to keep the lights on. And then there's the farmers, always the collateral damage in these geopolitical flex contests. In 2018, China targeted US soybeans and pork. Now, they've shut the door almost entirely. It's not just economic pain, it's political suicide. This trade war isn't about tariffs, it's about leverage, and China somehow managed to flip the entire board. Now here's what's wild. For decades, China needed the US more than the US needed China. America was the buyer, the big spender, the market everyone wanted. But fast forward to 2025, and we're looking at a role reversal. The student has become the master. Maybe not the master, but definitely the guy who showed up to the duel with body armor. In the US, it's wearing a foam helmet. Here's how China pulled it off. First, they stopped being dependent on American demand. Back in 2018, nearly 20% of China's exports went to the US. In 2023, just 12.8%. Meanwhile, total exports from China grew from 2.5 trillion to 3.4 trillion. Translation: China found new friends. While the US was raising walls, China was building bridges, especially with countries in Africa, Latin America, and Southeast Asia. And they've been busy behind the scenes too, setting up massive infrastructure projects, signing new trade deals, and even hosting CEO summits where, yes, Jack Ma showed up looking like he hadn't just spent years in exile. Why? Because China is trying to look like the stable one, the adult in the room, the reasonable trading partner. Let's pause on that for a second. China, the one-party censorship-heavy, centrally planned economy, is out here looking like the chill option compared to America's tariff chaos. And you won't believe this part, because while America was trying to bring jobs back by scaring companies into onshoring, companies basically looked at the US demands and said, "Bless your heart," and booked the next flight to Bangalore. That's what Apple's doing, and Samsung, and dozens of manufacturers. Nobody's racing back to Ohio to build factories. They're shifting to the next cheapest labor market that isn't in a trade war. And now, even America's allies are getting spooked. Japan, South Korea, Canada, the EU, they're all watching as the US is swiping left and right on trade deals like it was bored on a Tuesday. One minute it's reciprocal tariffs, the next it's 90-day delay. And then there's the one that got away, the Trans-Pacific Partnership. That was supposed to be America's power move, a massive free trade alliance to box China out. What did Trump do in 2017? He bailed. So now, China is making its own plays. Meetings with Japan and South Korea are back on the calendar. China's top trading partners, not as loyal as they used to be. Meanwhile, America's standing there, arms crossed, yelling about soybeans. And here's the strategy nobody's talking about. China controls the supply chains. Not just makes a lot of stuff. No, we're talking about dominates the production. China controls over 80% of that global rare earth metal processing. These are the metals needed for wind turbines, EVs, missiles, satellites, and your AirPods. Rare earths, the geopolitical equivalent of that one load-bearing screw in an IKEA bookshelf. You don't notice it until it's gone, and then everything collapses. Even if product is made in Mexico or made in Germany, there's a high chance it contains Chinese parts. You can't just cut China out of your supply chain. That's like trying to make a cake without flour, or sugar, or a bowl, or a kitchen. So when America slaps on a tariff, it's not just punishing China, it's boomeranging back onto every factory that depends on Chinese inputs. That's a lot of factories. And this is where things get scary. Because global trade doesn't work like a bodega. You can't just ban one vendor and expect to grab the same stuff on a different shelf. So when the US tries to isolate China, it's actually isolating itself. Now let's talk about consumer impact. America is built on consumption. That's our superpower. But tariffs are like kryptonite to cheap prices. As Chinese goods become more expensive, inflation spikes, the dollar weakens, confidence plummets, and yes, consumer sentiment just hit its lowest level in history. The University of Michigan's index tanked to 50.8 because people think prices will rise 6.7% over the next year. That's the highest inflation expectation in 4 decades. And the worst part, it's manufactured. Literally, this isn't a supply shock from a war or pandemic, this is a policy-induced disaster. Oh, and the markets, they're on a roller coaster. On April 9th, after Trump's bombshell, the S&P 500 dropped 15%, bond markets convulsed, and gold prices fell in a panic. Then hours later, Trump paused some of the tariffs, and the S&P bounced back up 10% in a day. Investors were yo-yoing so hard they probably got whiplash. It's like economic policy by Twitter poll. And while all this chaos is playing out, China's stock market up 15%. Their consumers spending more. Their policymakers calm, collected. All right, let's get into the real power behind the US. Not its tanks, not its burgers, not even its TikTok regulations. I'm talking about the dollar. For nearly a century, the US dollar has been reserve currency of the world. That means other countries not only trade in it, they save in it, invest in it, and hoard it. And why not? American Treasury bonds have always been seen as one of the safest investments on earth. But now, that's changing. Because when Trump launched this tariff war in 2025, it didn't just mess with supply chains and consumer prices, it hit the heart of the global financial system. Let me explain. On April 9th, as Trump's reciprocal tariffs kicked in, something terrifying happened. Not just to the stock market, but to the bond market too. The yields on 10-year Treasury bonds jumped from 3.9% to 4.5% in a matter of days. Sounds small? It's not. That kind of spike means investors are suddenly demanding way more money to hold American debt. That's code for, we don't trust this economy anymore. And when people lose faith in your bonds, you lose faith in your currency. Even Goldman Sachs freaked out. Their economists gave a 45% chance of a US recession within the next year. That's basically a flip of a coin, with your wallet hanging in the balance. So what caused this? Was it inflation, war, an alien invasion? Nope, it was uncertainty. Policy made up on the fly, announcements with no warning, a president tweeting tariffs like it's Wordle. And that's where the damage really kicks in. Not just what's happening, but the fact that no one knows what's going to happen next. Now, let's talk about capital flows, because this is where the cracks in the dollar really show. Tariffs don't just reduce trade, they also reduce the inflow of foreign capital, because when you mess with imports, you're also messing with your current account and capital account. Let's economists speak for less trade equals less foreign money coming in to buy US assets. So what happens when fewer foreigners buy American debt? Well, Americans have to step in and buy more of it themselves. That means less money for private investment, less innovation, less infrastructure. Basically, more potholes, fewer factories, and crappier airports. The Penn Warden model says that over the next 30 years, this combo of reduced trade and capital inflows could shrink US GDP by 5.3%, wages by 7%, and the capital stock, the stuff we build and invest in, by over 10%. So yeah, America first might just mean America alone. Meanwhile, China, it's playing the long game. While America yanks the rug from under its own financial system, China's quietly boosting its domestic demand, stimulating consumer spending, and printing just enough money to cushion the blow. Sure, their GDP might dip 2.2% from these tariffs, but here's the catch: they planned for this. They even took the moral high ground, letting the US look like the erratic bully while they positioned themselves as a calm, collected alternative. But here's the most terrifying part: the doom loop. As Treasury yields rise, bond prices fall. Hedge funds, which use these bonds as collateral, get margin calls. They're forced to sell more bonds to raise cash. And when everyone starts doing this at once, prices crash further, causing more margin calls. It's a financial snake eating its own tail. We saw this kind of chaos in 2020 with British pension funds. Back then, the Bank of England had to step in to stop a total meltdown. This time, the US system's at risk, and the Fed stuck between a rock and a flaming dumpster. Because if the Fed cuts interest rates to calm markets, they risk fueling inflation, which is already spiking thanks to the tariffs. But if they do nothing, the markets might spiral anyway. It's a lose-lose situation brought on not by economic fundamentals, but by chaotic policy. And let's not forget, America still needs to borrow trillions to fund its budget. If trust and treasury bonds keep sliding, borrowing gets more expensive, and the whole house of cards starts to wobble. This isn't just a trade war anymore, it's a test of America's financial credibility, and so far, we're failing. It was like an American-hosted global potluck. Then, about halfway through, America decided to charge everyone for using the plates and insult their dishes. So the guests started quietly texting each other about going for pizza afterwards. That, my friends, is how America is now viewed on the global stage. Because while Trump has been busy hitting China with tariffs, he's also slapped tariffs on almost every major trading partner we have. Europe, Canada, Japan, Mexico, South Korea, even allies in Southeast Asia. And yeah, he delayed those tariffs for 90 days. But let's be real, that's not a strategy, that's a timeout. In the meantime, countries are hedging. Let's take a quick trip around the globe. Japan and South Korea sat down with China for trilateral trade talks. First time in 5 years. Coincidence? Come on. They're not breaking up with America, but they're definitely seeing other people. Together, those three economies, China, Japan, South Korea, make up 22% of global GDP and nearly 1/5 of world trade. So yeah, they could form their own economic power bloc. No America required. Meanwhile, over in Europe, whispers are growing louder. France and Germany are talking about deeper ties with non-American markets. Canada is strengthening trade links with the EU. The message is clear. If the US wants to play lone wolf, the rest of the world is happy to start its own pack. And guess who's recruiting? China. They've already become the #1 trading partner for most of Africa. They've poured billions into infrastructure projects across Asia, and now they're dangling trade agreements in front of smaller economies like the friend who actually brings good food to the potluck. And here's the kicker. In the eyes of many developing nations, China looks more open, more consistent, and brace yourself, more trustworthy than the US. It's like a plot twist where Darth Vader ends up looking like the good guy. Because while America threatens tariffs over TikTok, fentanyl, trade deficits, or just vibes, China's saying, come trade with us, we're open for business. They played the long game, and now it's paying off. Remember that Trans-Pacific Partnership that was supposed to be our big anti-China move that Trump torched? Well now, those same countries are asking, what's stopping us from just working with China instead? There's a word for this, decoupling. But here's the twist, it's not China decoupling from the West, it's the West decoupling from itself. They've spent 2 decades weaving themselves into everything. Decoupling from China is less like pulling a weed and more like trying to separate 2 fighting octopuses covered in superglue. Even if the US wants to reshore all this production, bring it home, it's gonna take years, billions, and a massive shift in workforce and infrastructure. And while that happens, other countries are asking, do we want to get sucked into this chaos, or should we just move on? Let's look at one more stat. In 2018, the US imported $547 billion worth of goods from China. By 2023, that number dropped to $436 billion. Sounds like a win, right? Less reliance. Not so fast. In that same time, China's total exports went up. They just sold to someone else, so who really lost out? Let's talk about the American dream, version 2025. You know the one. Factories humming, workers clocking in at 9 and out at 5, steel and pride in the air, and a Ford pickup truck in every driveway. But here's the inconvenient truth. That dream is gone, and the trade war didn't bring it back. It might have actually buried it deeper. See, one of the biggest justifications for these tariffs, the whole "we're bringing back American manufacturing" thing, sounds great on a bumper sticker, but reality, totally different beast. Because even if the US does bring back factories, it's not bringing back the jobs. Why? Because of automation. Modern manufacturing isn't about line workers with lunchboxes. It's robots, sensors, and software engineers. The stuff coming back, it's being made by machines. So, if you're hoping tariffs will revive the Rust Belt like it's 1955 again, sorry. You're more likely to find Bigfoot working a union job at the Amazon warehouse. And even that warehouse might be in Mexico or India or Vietnam. Because here's the issue. The companies that used to manufacture in China aren't packing up and heading to Michigan. They're heading to wherever the new cheaper labor is. Let's take Apple. When it looked like tariffs would make iPhones 3 times more expensive, what did they try to do? Did they try and come back to California, hats in hand? Nope. They just ramped up production in India. Because it's not just about loyalty or patriotism, it's about margins. And now we're seeing this play out across the board. And no, China's not sitting pretty either, because companies like Samsung, Dell, and Nike are quietly moving out too, not to punish China, but to protect themselves. Because when one lockdown or political spat can freeze your supply chain, you start looking real hard at Vietnam. Let's not forget, global supply chains take years to build. You can't just undo 2 decades of integration overnight. The factories aren't ready, the labor isn't trained, and the infrastructure's still catching up. Even if the US wants to manufacture more at home, there is a major speed bump: the people. You need workers, you need immigration, you need vocational training. But what do we have? A labor shortage, an aging workforce, and political parties fighting over who gets to tweet the word invasion first. So, who suffers most from all this reshoring wishful thinking? Let's break it down. Consumers. We've already talked inflation. Prices are up. Tariffs don't just hurt foreign producers. They get passed on to you. Your toaster now costs as much as your microwave. Small businesses, they can't absorb cost hikes like big corporations can. When raw material prices go up 20% because of tariffs, they can't just optimize the supply chain, they shut down. And farmers, remember the soybeans, the pork, the corn? Yeah, China doesn't want them anymore, they're seeing other people. And manufacturers, even the ones that are still standing, because many of them rely on parts from China, made in America, usually comes with a side of assembled using globally sourced components. Which brings us to another overlooked point: US exports to China. Yeah, we export stuff too. In 2023 alone, that included $18 billion in aircraft and engines, $13 billion in integrated circuits, $11 billion in petroleum, $8 billion in soybeans, and $8 billion in pharmaceuticals. So when China slaps 125% tariffs on American goods, that's not just a tit for tat, that's economic napalm across multiple US industries. And here's where it gets really messy. Other countries, they're watching all of this, and they're not thinking, wow, we should side with the US. They're thinking, wow, we better not really rely on these guys. Which means even non-Chinese supply chains are starting to move away from America. Let's think on that for a second. America picks a fight with China to reduce dependency, but in the process, it makes everyone else want to reduce their dependency on America. China just waited. They kept exporting, diversified, smiled politely, and watched global sentiment shift. They built out their EV industry, took the lead in solar, and are starting to perfect their chip production. And while America was busy yelling about economic bullying, China was quietly becoming the guy who sells you the tools you need to compete in the 21st century. So now, America's got a choice: double down on a losing strategy, or try to clean up the mess before it spirals into something even worse. So we've got to ask the real question now: what happens next? Because the truth is, the damage is already done. The world has changed, supply chains are moving, alliances are fraying, and America's grip on the global economy is slipping. And the worst part, the US might be the last one to realize it. Let's circle back to the big picture. This trade war was supposed to fix a few things. Instead, here's what we got: a fractured global economy, a self-inflicted inflation bomb, an angrier electorate, and a much more confident China. Because while America was fumbling around with 145% tariffs, China was preparing for decoupling like it was prepping for a second Cold War. They become less reliant on US consumers, strengthened their domestic economy, and deepened trade ties across Asia, Africa, and Latin America. Meanwhile, American companies are scrambling. Some are rushing to set up shop in India or Vietnam, others are eating the costs, and a lot of them, they're just stuck, paying more for parts, waiting longer for shipments, and trying to keep shareholders from freaking out. So let's talk outcomes. Scenario 1, the US blinks again. Tariffs get quietly rolled back, not all of them, just enough to stop the bleeding. Markets recover, inflation eases a bit, but the credibility damage, that's permanent. The message to the world becomes, America makes threats it can't follow through on. Scenario 2, the US doubles down. More tariffs, more isolation, more inflation. Allies pull away, investors get jittery, and eventually recession hits. The Fed cuts rates, but the damage is already baked in. The dollar, still dominant, but with more side-eye from global markets. Scenario 3, global trade divides. The East versus West dynamic becomes real. Two supply chain ecosystems emerge, one led by the US, centered around Europe and North America, and the other led by China, anchored in Asia and the global South. Everyone's forced to choose sides, or play both, quietly. Now here's the part nobody wants to talk about. This doesn't end cleanly. Companies will never forget that overnight their entire supply chain became a political football. Countries won't forget that the US was willing to light the trading system on fire to score a few points on cable news. And China? Oh, they're just getting started. They've taken the blows, absorbed the pain, and used the chaos as cover to rise, not just economically, but diplomatically, technologically, and even ideologically. They're pitching themselves as the stable alternative. And in a world where stability is in short supply, that sells. So what should the US do? First, stop pretending tariffs are a magic fix. They're not. They're a blunt force tool that cause more harm than help in a hyper-connected world. Second, rebuild alliances, not just with photo ops, but with actual trade agreements. Resurrect TPP-style deals, coordinate with allies on tech, defense, and critical minerals. Third, and this is a big one, invest in domestic competitiveness, infrastructure, education, automation, and R&D, because yelling at China won't make America strong again, building it will. But if none of that happens, then yeah, we might be witnessing the twilight of the American trade empire. Not because we were conquered, but because we imploded economically, diplomatically, and strategically. So next time someone says we're winning the trade war, ask them, winning for who, at what cost, and what's left when the war is over? Because when the dust settles, one thing's clear, this wasn't a trade war, it was a wake-up call. And in America, the alarm's blaring, the house is metaphorically on fire, and America's arguing about who used the last Nespresso pod. So this wasn't just a trade war, it was a wake-up call. And if you're still watching, you're the kind of person who doesn't hit snooze on history. So hit subscribe, we dive deep every week. And if you want the full picture, the next chapter's right here. Just click to continue the story.